Welcome traders to another episode of T2 SMC Trader. So in this video, I would love to talk about the London session, New York London session, how to trade the London session and what is the psychology behind the London session. Price action is always the same, but before the price action, you need some specific information that will help you to determine how this session is going to work. If you really know about that information, you will be alert beforehand, and that will help you to fix your direction or the bias. If you watch this video, I believe that those information you will be able to grab from here, and it will help you to your trading journey. So before going into this video, please don't forget to give me a thumbs up. Your likes actually give me a lot of inspiration. Don't forget to comment if you have any doubt, and subscribing to this channel if you are new to give us your support. So let's go to the video. Here, this is the London session. Now it's around 7 a.m. New York local time. The New York kill zone has started. But today, I'm not going to talk about the New York kill zone. Instead of that, I would love to talk about the London session only. Okay, so this is the move from the London session. It started from here, it ended here, okay, around that area. This candle, this is the London session move. This is Nasdaq 15-minute chart, and if you have watched my last video, you know what I talked about this fair value gap and what was all about. Inside this fair value gap, we had the new day opening gap. Yesterday I told until this fair value gap is not broken, you can't look for buy. But when price will close above this fair value gap, the line, I mean the box over here, okay. So when the price will close above this fair value gap, then you will start to look for buy. Now I'm gonna validate my point. Look, when it closed, this is the first time, right? It closed above this fair value gap, then it tapped to this fair value gap, went higher, come back again to this fair value gap, went higher. See, this is how you should depend on the, I mean, some kind of price action I outlined beforehand. But if you don't give the priority to my information, it's gonna be difficult for you to trade. Trust me, brother, because I'm providing you the real information that you are not going to get from anywhere else. Then market went through this fair value gap after the London session. I'm not interested to talk about this. I decided to make this video after this run. The reason is so that I can explain why you should not look for sell and why you should not care about that run. Okay, so let's go to the video. I would love to go to 1 minute chart now. Just remember, this is the fair value gap from 15-minute chart. Yesterday I was expecting this fair value gap will hold the price, send it back for the sell side. Now I'm in 1 minute chart. First, you have to understand what is London session, New York London session, what it does actually. New York London session actually works for two logic. The first logic is its intent to make the liquidity. The second logic, it actually go for the liquidity. Now, which day it is going to make the liquidity and which day it is going to take the liquidity, it's a suspense. I believe that nobody knows that, because this is the price action that is unpredictable. So that is why I don't trade around the London session, because if it is going to take the liquidity, it's very easy for me to take the entry. But if it is going to make the liquidity, it's really so difficult for me to trade that specific day. I'm not a London guy, but here the information I'm just giving you, don't forget to note them down. So the first information is how the London session works. First, it make the liquidity, or second, it actually take the liquidity. Two type of things happened around the London session. Now, when market close above this fair value gap, what should I look for? Only buy. This is outside of the London session. Whole of this price action is outside of the London session. So I have nothing to do around that area. Okay, just nothing to do around that area. Before this high, we had just that all-time high and a single high. As I told, I don't mark the single high as my target, and this is the 50% of that week from 15-minute chart. So it reversed from that last fair value gap, by the way. The 50% of the week is also called the last fair value, something like that. I don't mark the single high as my liquidity. Instead of that, I love to mark relatively equal highs for my liquidity. So when market tapped over there and it was going higher, this is two reasons I'm not interested to take an entry around that area. The first reason is, even if it was inside the session, I wouldn't go for that. First reason is I don't have any liquidity above there. Second, I don't have the session time around that area. Finally, price reached into this London session around 2 a.m. So here, this is 2 a.m. This is the first candle inside the London session. Market went little lower, it went higher and stopped over there. When it stopped over there, now it started to fall. Are you going to take sell over there? You look for sell? No, you should not look for sell. Why? Because when market closed above this fair value gap, you only should look for buy, no sell for here. So you will let this go and you will see how far it can reach. At the same time, you will see what happened over there, why it made that high. See this high from 1 minute chart and also from 15 minute chart. I would love to mark that high, not the extreme one, because there is another line. So I should mark the extreme one. But either way, this high is also okay. This is also, I mean, swing high. That is obvious. This high and that high. What is that? Now I have relatively equal highs. Can you see it? A very nice relatively equal highs. Don't focus after price action until here. This high and that high. They are relatively equal highs now. What do you have now? Buy side liquidity. See the buy side liquidity. After making that buy side liquidity, market is falling. How far it can fall? Look on your left. What do you see? This is the market went higher. How it went higher? After tapping over there, boom, went higher. What do you see around that area? That is new day opening gap low. So this line, that line are the new day opening gap. This is the constant encroachment of that new day opening gap. This low tap to this new day opening gap. What else do you see? The last fair value gap from 1 minute chart. So let me mark the last fair value gap from 1 minute chart. So here, this is I'm marking because of the new viewers who don't know about the last fair value gap. I have shown you a lot of times the precision of the last fair value gap. It tapped to this last fair value gap, went higher. See, when it went higher again, what it left? Again, just mark the last fair value gap. I'm going to mark the last fair value gap here with the green line. So this two green line is also the last fair value gap. Now market came here again. Okay, so now I am inside the London session. It left that buy side liquidity. I am bullish. Why I am bullish? Because this fair value gap failed to hold the price. When it closed above this fair value gap, I am now bullish. But before, I didn't have any buy side liquidity. Now I have the buy side liquidity. It went lower. Where did it came? To the top of this bearish fair value gap, new day opening gap, and specifically that 1 minute last fair value gap. It has taken all the liquidity. There is no liquidity left. See this low and that low. They were relatively equal lows. All of these lows has taken over there. Are you in the session now? Absolutely, you are in the session. That means you are in London session. How do the London session work? Either it will take the liquidity or it will build the liquidity. Where do you have the liquidity? Here you have this relatively equal highs. Remember this green line? That was your buy side liquidity. So let me mark it as buy side liquidity. That was your buy side liquidity. So what it is going to do? Either it will take that buy side liquidity or it will make that as a buy side liquidity. Market went lower. Do you have a market structure sheet? Here, this is the part is very important. See this market structure sheet? This swing high shifted over there after taking the liquidity, tapped to the last fair value gap. Bearish fair value gap turns into the inversion fair value gap, new day opening gap, high. All of these confluences. You have this buy side liquidity. After tapping over there, after taking all the liquidity, market structure sheet. This market structure shift is not valid. I really wanted to see it will tap to this fair value gap. This swing high will tap to this fair value gap. Then it will be valid for shifting market structure. but it didn't do that. So this is not a correct market structure shift. Then why you are marking that? If you were with me in my live yesterday, then I told that when you are expecting something, I mean, you know how this is going to work, where it will go. Here, you saw this run, but you didn't do anything when market was falling, because you know above this parabolic gap, you should only look for buy. And you have this relatively equal highs now and the all-time high. I guess I didn't mark the all-time high. This is the all-time high, okay? So it can go for that all-time high. At the same time, you know that it can make the buy side liquidity as well. So either way, it is going higher. So you can force the market to give you the setup here. Just one thing is missing, and that is market structure shift. This swing high is not valid for shifting market structure. Either way, you can force this one. If you want to force it, what should you focus? Your stop loss. Let me show you that. This is the fair value gap. What is that called? Entry fair value gap. Where is your breakaway gap? There is your breakaway gap. Okay, let me mark it as a breakaway gap. So this is your breakaway gap. This is your entry fair value gap. You will take your entry over here. This is how you should trade. To that, when it will tap to this fair value gap, you will take your entry. Where should be your stop loss? Below the breakaway gap. Where should you target? To the buy side liquidity. Here, if you want to force this trade, you have to care about the stop loss. How much stop loss is going to be over there? Now you can see 8 handle. As I told yesterday, if you are trading mini Nasdaq, then 5 to 10 handle is good for me to force the trade. If every single thing is okay, I mean, for example, what I mean by that, I'm looking for buy. Market has the buy side liquidity from 15-minute chart. This is the extreme liquidity, okay? Then from 1-minute chart, market has taken the liquidity, rejected from a certain level or some kind of, very important level. This is the last parabolic gap. These two green line. Also, new to opening gap high. Also, this bearish parabolic gap above the constant reinforcement, above part, okay? If it is rejecting from some kind of level, then if it give me a market structure shift, and the market structure shift is not accurate, that means it missed that parabolic gap for maybe 1 tick or 2 tick, something like that, 1 or 2 tick. In that type of situation, if I see the stop loss is near about 5 to 10 handle, yeah, I will force the market to give me the, to take that entry, because if I'm wrong because of that market structure shift, I will take a small loss. You can't avoid the loss, it's inevitable. So you have to take the loss. Here everything is in my way except the market structure shift. So I'm gonna force that trade until that buy side liquidity, right? Here one thing is missing again. What is that? You can't hold your trade until the extreme liquidity. This is the extreme liquidity because this liquidity is from your 15-minute chart. I didn't mark it from 15-minute chart. You have to mark that high from 15-minute chart, as I have the constant reinforcement line. That's why I marked it from there. So that is called the extreme liquidity. You can't hold your trade for the extreme liquidity. And London session, how much handle should you target? 15, 10 to 20 handle. 10 to 20 handle is more than good for the London session, because this is a very slow market. There is no volatility. So if you can catch 10 to 20 handle, trust me, brother, you are already profitable. So this is the extreme liquidity. You can't hold your trade until that area. Instead of that, you have to look for some kind of buy side liquidity from 1-minute chart. So I can see this line is relatively equal highs. See all of this relatively equal highs. So you should target over here. But risk to reward ratio, brother, near about 1:1.7. It's not good. And if I actually target over there, how can I take the partial? I don't have any partial area, right? Because you can see it's a very small range. So I don't have any partial area. Well, then you can focus over there. You will take a partial over here. You have to take a partial over here. This is obvious. You have to take. If you are unable to take the partial, you have to close your trade over there. That means why you are unable to take the partial. For example, you took one contract entry, just one contract entry. You have to close your trade just around there. You can't hold your trade until the extreme buy side liquidity. If you have more than one contract, you will target over there. You will take a partial over here, and when market is extremely so high, okay, so high, maybe you will trail your stop loss. I mean, step by step, you will trail your stop loss, and then you can see finally it didn't take that buy side liquidity. Instead of that, it fall again. It never take that buy side. What does it mean? It has made the buy side liquidity. So today London session has made the buy side liquidity. This is the part you have to understand perfectly, that London session is sometimes to take the liquidity, sometimes it actually the making liquidity making session. So maybe you will be stopped out after taking the partial. You will be stopped out around that area somewhere. After trailing your stop loss with logics, you will be stopped out around that area. This is the only setup from today's London session. If you see this was your setup, you did something wrong. Whatever I told you by my last video, I am absolutely fail over there. You didn't listen to me anything, and you are just doing the same thing you did in your past. No sell setup is valid. This is your only setup. Then market is falling again. Are you going to take sell? No. Are you going to take buy? Yeah. If you get any other setup, I mean, after reaching over there, if you find out any breaker block, actually here I would look for the breaker block, but you can see market was actually falling, so there was no breaker block opportunity. At the same time, after this line, sorry, over here, this is the last candle of the London session. After this candle, no entry is valid. That means this is the last candle of the trading session of London, so no entry is valid outside of the session. You can see this is the very worst price action around that. So you will be able to catch that move, and this is called the logical move. This is how the London session work, and you should look forward that. Now, if you don't want to force the trade, no problem, brother. Then this London session wasn't for you. So you didn't push your button in this London session. There is nothing to worry about that, because this is just a London session. Still you have New York AM kill zone, then New York AM session, New York PM session, lot of area you have to trade. You don't need to think that if I miss the trade from London session, I'm gonna miss everything. So please don't think like that way. Instead of that, if you just don't wanna force, I will tell you, or I will recommend not to force the trade, because most of the time you are not ready to accept your loss. As I told, 5 to 10 handle loss is nothing, because that is logical. You have to pay the commission of this business. So maybe most of you are not ready to, I mean, accept that loss. So that's why please don't force the market. Instead of that, look for the perfect market structure shift in that type of scenario, where you should look for buy or you should look for sell, whatever your price action is telling you. If you find out the perfect setup, go for that trade. And if the perfect trade doesn't work, just simply say the perfect setup didn't work, because every single time it will work. There is no that type such strategy. There is nothing called like 100% accuracy. So it's a game of probability. You have to understand that fact as well. That's why losing trade is inevitable. Okay, so that was the London session. I wanted to show you the perfect setup from the second chart, that means sub 1 minute chart. But I guess it's already a long video. I don't want to go much more deeper. So that's all. And you see this fall, you don't get panic over here. Don't get panic over here, because this is outside of the session. You don't care about this price action. This whole price action, you don't give a shit over there. Okay, so that's why I thought that I should make this video. When you got your run toward your direction, toward your expectation, and you did your job, perfect, complete. You don't need to predict the close. Where market is going to close, you don't need to predict that. It can just simply now keep falling. It will never come back again over there. Doesn't matter. You don't need to focus over here. Remember this line, this sell side liquidity line, and I told that market is going to take that sell side liquidity from yesterday. It can go for this sell side liquidity now. What else I can show you? Let me show you something from the hourly chart before closing this session. This is for your New York session. Actually, if you are still watching me, then you will get this information. Otherwise, maybe you have missed it. This candle has traded this parabolic gap, right? The lowest down close body close candle. The opening is your order block. Mark your opening, extend it to your right. The rejection from the order block, boom. Now it came here, made the buy side liquidity, come back again to this order block. It can expand higher again. Here in this type of situation, this bearish value gap is your main resistance, and I believe that it will go. I'm extremely sorry. It will fall or it will go higher. We will see that on the newer session. Okay. So until the next video, cheers, guys.